Welcome, dear traders. As the rule, the Asian session echoes the previous day's sentiment on Wall Street. As a result, the risk sentiment is decreased and stock indexes are falling. As one can guess, the currency market should expand in such an environment. And you are watching a recap of the Asian session on September 28. The US dollar has rallied on diminishing risk sentiment during the Asian session on Thursday. The greenback jumped to 106.75 against the basket of its G6 counterparts on expectations that the Fed will likely to maintain high interest rates for an extended period. Hawkish comments from Minneapolis Fed President Neel Kashkari fueled expectations of another rate hike before the end of 2023. In addition, the US dollar's rally has been bolstered by a growing sell-off in the US Treasury markets, and this has pushed the Treasury yields to 16-year highs. Recently, the US dollar has traded higher near 10-month highs. However, the greenback started to decline within the range of 106.50 and 106.70. Most likely, the US currency faced bearish pressure on a moderate recovery of a risk appetite. The dollar-yen pair fell slightly today, showing high volatility and testing 149.50. As the pair continues to approach the psychological level of 150, Japanese financial officials speak about the yen's exchange rate almost every day. And today, Japan's finance minister Shinichi Suzuki reiterated that he would not rule out a response to expensive yen volatility. Perhaps he will have to move from words to action. So far, there is no sign of a reversal in the yen's upward trend. At the beginning of Thursday, the pair was sliding down within the range of 149.20 and 149.60. However, the weekly chart shows that the pair's upward momentum has not exhausted. In addition, technical indicators are pointing to further gains in the pair. In the Asian trade, the antipodium currencies managed to recoup some of the losses against the greenback. The risk barometer, the Australian dollar, reached its 10-month low. At the beginning of Thursday, the Aussie offset some losses within the range of 0.6344 and 0.6382, posting green figures. The Australian dollar ignored the data on retail sales in Australia, which turned out to be below estimates. However, the Aussie dollar pair did not take advantage of rising oil prices. For example, the WTI price is growing for the third day in a row, soaring above the early high. Hopes of an economic recovery in China are also supporting the positive sentiment in the Asia-Pacific markets. The Chinese economy will require more commodities and fuel. Against the backdrop of signs of shrinking global oil supplies, crude prices soared to last August highs. In addition, fuel demand in China, the world's largest oil importer, is expected to rise during the week-long holiday that starts tomorrow. However, investors remain concerned about China's real estate sector. This is especially the case after the Hong Kong Stock Exchange suspended trading in the shares of the troubled real estate company Evergrande. Additionally, China will release manufacturing activity data for September on Saturday. On Sunday, the official index of business activity, and these indicators will allow markets to better assess the world's second largest economy. After all, the Chinese market is the main trading partner of the neighboring countries. The New Zealand dollar also turned bullish early Thursday after weak trading in the previous two sessions. The Kiwi rose to 0.59, moving within the trading range between support at 0.5910 and resistance at 0.5950 in the Asian session. The New Zealand dollar received support from a domestic data today. Fresh reports showed that business sentiment turned positive in September for the first time in 28 months. In addition, the country's central bank may raise interest rates on October 4. Notably, inflation in the country stands at nearly 6%, remaining above the regulator's 1 and 1.5% target range. Federal Reserve Chairman Jerome Powell is scheduled to speak today. Undoubtedly, markets will be looking for additional clues about the U.S. monetary policy in his statement. That's all for now. Leave your comments below and don't miss our next video review. Remember that staying up to date is the key to success in your trading. See you online soon.